So I'm going to pitch you on why it's great to be an entrepreneur right now. First of all, there's a tremendous amount of capital, tremendous amount of uninvested venture capital in the Valley. My fund alone has, depending on how you count reserves for already allocated, companies that we're already in, we have at the low end 500 million, at the high end 800 million left to invest. That's just one fund. So there was a tremendous raising of venture capital that occurred. More venture capital came into the market. Much of it is located in the Valley, and much of it is invested by people who feel, for whatever reason, that the Valley is also a great place to start a company. And so this is a great time to be an entrepreneur. The second thing is there is a rationality to the market with respect to hiring, with respect to office space, with respect to the expectations of the people that you're working with. I think that's a really good thing. I think that there's a lot going on in the market right now that can be very helpful to you as an entrepreneur. I think that the valuations, I know you're going to be surprised when I say this, but I think the valuations are still pretty high. I think that back in the Stone Ages when I was an entrepreneur raising venture capital, I'll use my own company as an example, we had $3 million in revenues and we were profitable and we raised money at a $3 million pre-money valuation. I think today raw startups are still raising at over $1 million valuation. I think there's an interesting dynamic behind that. I think in part it's because venture capitalists want to give their startups a leg up in the chance to succeed, and they believe that one of the biggest wastes of entrepreneur time is raising money. So if you give the company more money, then they don't have to go out and raise it again. So I kind of liken it to, in the olden days, you used to maybe get $500,000, build your company for a while, and then get $2.5 million in the next round. Well, now we'd rather just give you the whole $3 million up front. But we're going to hold you to some milestones and accountability in terms of what you do with that money and what happens in order to continue to meter the money out. You don't get the check on day one. You might get it over time. But I do believe because of that, the valuations are pretty good. I think that the collaborative efforts between entrepreneurs and venture capitalists with other venture capitalists. I mean, I think there was a while in the market here where the idea was, gee, if I think it's a good deal, I think I want to hog it all to myself. Well, what happened to the deal hogs is you come up for the next round and nobody wanted to follow, and you were there by yourself slogging away trying to make the company successful with the management team without the support of a syndicate to help the deal be successful. So now there's a lot more syndication going on. People are talking to each other. People are sharing due diligence on deals. And so I think it is a real opportunity to build a team. In fact, I often say, when I was raising money, what I would look for in a venture capitalist is not the money. I mean, the money's really important, but at the end of the day, when you make a deal with a venture capitalist, it's really the only time that you're getting someone to work for you and pay you at the same time. So it's a really compelling proposition, and you better make damn sure that you populate your investor pool with people that you think can really add value to your company.